Good afternoon, everybody. I am an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. The position disclosure update's the same as it was yesterday, except I added on some UVIXI June 21st 34 puts, and I bought some Meta after hours. Of a small position in Meta. I was able to scoop 440s twice, dump some like 445s, just kind of looking for a bounce. Yeah, there we go. There's been a big seller on the way down, but little Jimmy just came in there at 444 for 32,000 shares. See if they can juice it a little bit. Not looking for too much. The report looks just fine to me. This is such an interesting earnings season that we're in right now, where they'll rip Tesla higher on a terrible looking report because the stock was so beaten up on it. Netflix, I thought the report was really good, but fine. They got rid of some information there on user growth, which the market didn't like that they got rid of that, so they hit it a little bit, but otherwise those numbers were good. And then for Meta here, I think they got on the call, so we're not seeing guidance, but the numbers look pretty solid to me. Just watching the tape at the same time as I try to read the numbers out loud here. Q1 2024 earnings, EPS is a solid beat. $4.71 versus estimates of $4.30. Revenue is a beat, little beat. $36.46 billion versus $36.12 billion. So little beat, not fantastic, not knocking your socks off, but a little beat. Ad revenue, important number here, $35.64 billion versus $35.57 billion. Once again, little beat, not knocking your socks off, but a little bit of a beat. Reality Labs, $440 million versus estimates of $494 million. Who cares? Reality Labs missed by 50 million, 54 million bucks. Family of Apps revenue is a little beat again. Family of Apps operating income is a real small miss. Reality Labs operating loss. I think this is an important one to beat on. The Reality Labs operating loss is. I almost think that this is more important than having this loss be less than expected. More important than the Reality Labs revenue. But Reality Labs operating loss $3.85 billion. It's so much money. Versus estimates of $4.51 billion, but again, still a nice beat. Oh, there is guidance here. Okay, that's where we're hitting it down, I guess. The guidance is in the range. Yeah, guidance is in the range, but I guess the range is a little low compared to where that guidance was. So second quarter rev guidance is $36.5 billion versus. 36.5 billion to 39 billion or 39 billion versus estimates of 38.24 billion. So kind of within the range there, but the low end of the range. That could be hitting it down a bit. Right now the stock is exceeding the measured move, which I think was like to 451-ish on the downside, down over 10%. On a mediocre earnings report. You can't look at this and say that this is a bad earnings report. There's no major misses of expectations on here except Reality Labs revenue being off by 54 million. Who cares? So I don't know. I just think that this is an interesting earnings season, and this just is what we have seen time and time again on earnings seasons. You have a really big run into report. A good report's not going to be good enough. And I think that's what we're looking at here. It's fine. It's whatever. It's mediocre. It meets expectations broadly across the board, beating by a little bit in most places, missing by a little bit in a couple places. And Meta back to 440 here. And the stock is getting shellacked on it. There's been a big seller on this thing on the way down, too. I was just reading those numbers, so I wasn't really watching the tape in the same way, but seller might be back at 440. Take a look on a retest of the tape. Nope, cleared right through it like butter. No seller there at all. I just sold some. All right, so we got Meta out. Nvidia's up on the capex spending. Came back down now. If it jumped, it came back down. Bill giving us an important headline here. I was just saying how good of a thing it is that Meta beat on their Reality Lab operating loss. And the headline here that Bill's providing is Reality Lab expect operating losses to increase meaningfully year over year. The market does not like that headline. The market does not like that headline. I'm pretty confident about that. I'm going to adjust my game plan on this position that I have right now. Keep an eye on it in here. Bring up this 5-minute chart over here. What was this bounce back to? I had an offer just in front of 450, which I no longer have that offer there. The high was 449. I brought that down now. All right. What else we got? Chipotle out. Love Chipotle. What are they doing? Chipotle monster like always. I just saw some like Instagram where somebody was hating on Chipotle. I was like, dude, get out of town. Chipotle still rocks. I'll tell you that's the one thing I miss when I'm out in Idaho is I miss Chipotle. I would like some Chipotle. It's gonna be if I get into a real city, it's gonna be the first thing I do is get some Chipotle. I went to Salt Lake around that Easter holiday, and on that Sunday, which I guess is Easter Sunday, I was like, I'm gonna get 2 Chipotles. I'm gonna eat one now, and I'm gonna eat one as soon as I get back to Idaho. I'm gonna bring it with me. And I drove to 2 different Chipotles, and they were both closed. I guess they closed them all. Pretty religious town, Salt Lake. I was very disappointed. But anyway, Chipotle numbers look great. Stock's up a lot. Did they split that thing yet? Aren't they gonna split it? There was a split announcement on Chipotle, right? Am I making that up? Oh yeah, Dennis is saying there that he thinks so also. June 26th, 50-1. Can't wait. This stock is not. Chipotle hasn't been a tradable company as far as the spread and everything in like a long time. I can't remember the last time I traded any Chipotle. IBM's out. What's IBM doing? Down. IBM trading down. We can look at those numbers tomorrow. All right, I'm gonna keep an eye on this Meta, which I might be about to hit out of. 440 buyer just came in on the bid. Refreshing buyer. Let's see if they apply more pressure on that or not. I might whack out into them. No after hour stops, so I got my finger on the enter button. I'm out. How much did I make? How much did I make? I made a few bucks. Made a few bucks, and that's after hitting out there. So I'll take the P&L. All right, now we can focus on the market and the meeting a little bit more. All right, so the SPYs are down about 10 cents after hours, and including that, they're down 0.5% on the day. The Qs, and I covered some T-triple-Q further into this down move. Q's getting smoked here after hours on this? Yeah. SPYs are only down 10 cents? Did I read that right? No, I totally misread that. Totally misread that. SPYs are down $2.20 from the close. So SPYs getting hit a little bit. Did we close positive in the SPYs? Looks like we closed pretty flat on the SPYs today, and now we're down 0.5%. The Qs closed green today. That I'm sure of. I don't remember by how much, but the Qs are down $3 here after hours and are now negative 0.4%. And is the Russell being impacted by this? Not at all. The Russell is exactly where it closed. The Russell was weak all day, down 0.4% on the day. So that is our numbers on the market. Just pull up the YouTube on my other screen here. I still want to keep an eye on this meta. Okay, so let's do a little bit of a recap. So coming into this morning in the morning meeting, I was like pretty adamant about us not buying today, and really looking for short setups. The after hours price action makes me look much more right than I actually was during the day, but it was still the right idea. We had a really big 2-day bounce back from the first time we hit more extreme oversold levels. So you see this market just sold off pretty much the entire month. That selling accelerated in a big way last week. It maximized on Friday. Friday on heavier volume here was the first time that we had hit extreme extension. As we kind of expected even on Friday afternoon, once nothing bad happened over the weekend, the market gapped up a little bit on Monday, rallied back for the SPYs and the IWM, but not the Qs to the ADMA on Monday. Yesterday, we were able to get some continuation, some continuation higher. SPYs got deeper into that equilibrium zone, got as high as like the 506 area, space between the 8 and 21 EMA. The IWM yesterday had almost tested 200, got all the way up to the 21 EMA. The Qs were lagging, but yesterday with the continuation, they got to their 8 EMA. So as of yesterday's close, you had the Qs, which are lagging the most, getting to the lower band of equilibrium, and the SPYs and the IWM in the mid to upper points of its equilibrium zone, which again I consider the space to be I consider the equilibrium zone to be the space between the 8 and 21 EMA on the daily chart. Then the Qs today took over the baton of relative strength. The Qs took over the baton of relative strength because of Tesla's report yesterday, which we spent a lot of time talking about yesterday and a lot of time talking about this morning, so I'm not going to waste my time spending a lot of time talking about it. But just to repeat what I already even said in this afternoon meeting, because we were talking about Meta, Tesla report I really thought was abysmal, but the stock is down 40% on the year into the report, and the short interest had increased to the highest amount it has in 3 years, and there was a bunch of fluff and language from Elon Musk that the market sometimes likes, and Tesla was able to give a pretty good rally, which enabled the Qs to be relatively strong, which enabled the Qs to play some catch up and get a little bit deeper into that equilibrium zone. But what I wanted to remind everybody in the morning meeting today is that market corrections, and I'm not saying that this is a market correction thus far, this is a pullback. I think we can, some generally agreed upon terms here. A market pullback is 5%, a market correction is 10%, a bear market is 20%. So right now we've had a little bit of a market pullback. We broke the 5% mark in the S&P from highs to lows, and I can't tell you right now today. I have no way to know. Josh has not mailed out his crystal ball to me with the donuts that he owes me. I have no way to know if this market down move that we've experienced could actually become something more, if it actually can become a correction. 5% down moves in the market are very run-of-the-mill. I think on average they happen every like 4 months or so. Market corrections where you get that 10% dip, I think on average occur every 9 months or so. What is the probability that a 5% move down in the market becomes a 10% move down in the market? I don't know those numbers. I feel like I should, but I don't. But I think that it's more likely when a market touches down 5%. If you just, and I actually don't know these numbers offhand, I probably should, so I'm kind of guessing a little bit here. But if you have a market that's down 5% and you were to go back 100 years, every time the market moves down 5% from all-time highs, is it a higher probability that the next thing that you see is all-time highs, or is it a higher probability that the next thing you see is the continuation of that sell-off to the point where it breaks 10% and becomes a correction? Historically, I'm pretty confident that there is a higher probability that the next thing that you actually see is all-time highs. So I am not here today even after this meta report that's hitting this market down, saying that we right now are in a market environment that is destined for a 10% plus correction or a 20% plus bear market. That is not how I operate. I take things day to day. I take things in terms of understanding what the recent move has been, what the extension looks like, where equilibrium looks like, etc. But what I can tell you is that if this pullback in the market is going to become a correction, or even if it's going to become a bear market, you will see really strong rallies throughout the course of that occurring. That is what happens in down moves. Down moves are marked by very sharp snapbacks. And it makes a lot of sense, especially when you understand the psychology of how weaker markets actually work, how bear markets work, how corrections work. Fear tends to be a greater emotion than greed when it comes to market environments. You tend to take the escalator up and the elevator down. That's what people say, because the market on the way up is kind of slowly climbing that wall of worry, and then the market on the way down is overwhelmed by fear, and people are running to the exit at the same time. That kind of creates that elevator down move. But what you get, and this is why I kind of like bearish market action in some ways, even though I tend to be an optimist and I tend to be a bull, is that it can create a lot of trading opportunities where you can have a lot more periods of time because of that fear, where markets can get extremely extended and then you can get the really big snapbacks. I mean, I remember in 2022 where we had a bear market, one of the things that I learned, and even though I've been trading professionally with T3 since 2010, if you go back and you count how many bear markets there's been since 2010, there haven't really been too many. So I do have experience in multiple market cycles and multiple market environments, but I don't necessarily have like a tremendous amount of bear market experience. When I kind of reviewed my trading in 2022, it was interesting to note that even though 2022 is a bear market, I made most of my money still to the long side. And in hindsight, if a similar environment were to occur, I'd like to think that I can do a little bit better on the short side in addition to the long side. But how is it possible that a trader could do, if you looked at my 2022 numbers, so well on the long side of the market within the confines of a bear market? It's because you get these really good opportunities for these sharp snapbacks. And 2022 was, full of them. There were full of periods of time in this year where you had really, really, really big upside moves. If we just want to take a real quick look at that calendar year, this includes pretty much all of 2022. You can see this snapback here where we went from 420 in the SPYs back up to 458. That's a big move. Or this was the Russian invasion of Ukraine, where we snapped back from a low of 410 to just in 2 days 438, and then before that low broke, we snapped back to as high as 462. I mean, that's a big move. It's a $52 upside move in the SPYs. And then you had another really big bear market snapback here from 380 to 417, and then another one that became an absolute low for a period of time from 362 to 431, and then obviously you had the absolute bottom occur in October that has led to multiple rallies and then higher lows from there. So the point of the matter that I'm trying to get across to you guys is the way that weaker markets work, and I'm not necessarily saying that we are entering a bear market or a market correction or anything like that, is that they they will give you really strong bounces and really strong snapback periods of time, and you want to learn to be able to take advantage of that. And that was one of the things that again, in hindsight, if I can go back to 2022, I could have done a better job on the bear side of the market, but we did a phenomenal job as a group, nailing to the day, to the penny almost, pretty much every single one of those major market lows over the course of that calendar year. And we just did it through an understanding of extension, positioning, sentiment, and then execution, right? And this is kind of a almost in some ways a microcosm of that. This is obviously a pretty small move, even though it's just in a couple of days compared to the ones I just pointed out in 2022 when we were in a bear market. But this is a move here from below 494 to 50. I don't know, let's say it's high, about 507 in 2 days in the morning. So you could take advantage of that. And again, I've said on a number of occasions this week that I do think that buying the bottom that came in on Friday was particularly difficult because we all kind of knew as a team here into the close on Friday that we were, at that degree of extension finally where we really should expect the snapback and really should be doing some buying. But it was a Friday afternoon, and a Friday afternoon, the same reason that the market even got to that point was the reason why it was difficult to buy. It's a Friday afternoon with geopolitical concerns, where the most likely situation we knew was going to be that we get a gap up on Monday, but there was a non-zero probability that there's a major escalation in that with those geopolitical concerns that could have the market gap down huge, which then we would have to take as it comes. So the point is we got a really nice snapback into that equilibrium zone, and I can't tell you right now if we're going to create a pivot high here that breaks this low, that works its way deeper, that triggers that medium-term CTA selling level that we've discussed, which I think is like 48.80 or something. I can't tell you if that's going to happen, or if the market's going to buy up Meta tomorrow because they decide the report's not bad. Mark Zuckerberg does a great job on the conference call. This becomes a V-bottom. Or I think that the more likely scenario is if, and again it's an if the bull market will resume from here, it happens via a higher low. It happens via a retest of like this $500 area, maybe a little bit lower than that, maybe even as much as 498, where you get like a little bit of a higher low that comes into the market that then breaks today's high, gets us back above 515, and then we're good to go. Either way, even in what I think is the higher probability bull situation of a higher low, either way, you're probably meeting selling in today's gap up this morning. And that's what I was really trying to get across in the morning meeting today is you could take a bearish stance if you want to and say, hey, this is just the dead cat bounce and we should be looking for our pivot high to be able to short. Or you could take the bull approach and say, hey, we had a market pullback here. We broke 5%. That's normal. It happens every 4 months. I'm making that number up on average historically, and more times than not, those situations then lead to a market that gets right back to all-time highs. Even whether you want to take the bull side or the bear side, the most likely situation was still that today's gap up was going to be sold, because this is now day 3 on the bounce back in a weaker market into kind of the upper band of the equilibrium zone. And that's why I was really trying to emphasize in the morning meeting today, like, sure, you could go long something that reported earnings or something that's really in play because it's going to have a much lesser correlation to the market than it would otherwise because of that news event. But if you're focused on the market or you're focused on anything related to the market, you want to be looking for short signals today. And it wasn't necessarily always easy. We had a really big bounce back here in the middle of the day, which Brant and I were just talking about a little bit. So it wasn't necessarily always easy, but that was definitely the right thought process. The market tried to hold in pretty well here. I think we specifically called out the short off the 950 high for the SPYs and for the Qs. That was a really good short call out. Qs were getting really extended at that time, even though Tesla was being pretty strong. That led to that 5-minute correction, which led to the 15-minute correction, which led to the gap fill. And eventually, again, there was a really big bounce midday here, but that got sold also. And if anything, we then called out the short off the 145 high, off that little tail high after the degree of this bounce. So I think that it was just a really good job by the team here. I was very market focused. I re-engaged my TQQQ short yesterday afternoon, but I closed it out into the close. I re-engaged it again pre-market this morning. I got decently heavier into that opening up move with the Qs, and then was selling that position on the way down, reshorting it into the bigger bounce, covering some of that position on the way down, and then keeping some of that position. Ooh, did I not write that in my disclosure? Whoops. Whoops. Where is it? Whoops. It was there the whole time. I'm short T triple Q. Disclosure purposes, as I'm talking about the market, you should be aware I am short T triple Q. I apologize, I forgot to add that initially. And you know, now keeping some of that T triple Q. Why am I keeping some? So this goes back to, if we want to take a half step back, it goes back to reward maximization and how to position yourself in the market, which is, you know, what we spent so much time talking about. We talked about, you know, into this degree of extension, and again, I understand that the execution was difficult, but into this degree of downside extension, that's where we want to be looking for our longs. And into this balance, and I particularly said it in the morning meeting today, if you've still got longs on, into this gap up this morning is where you want to be selling some of that position. Not all of your position, more of your position. I think that you always want to try to keep some of the positions that you have in either direction for the largest potential move that you could get from it. And you never really know where that's going to be. I don't think that we are just going to have a V bottom here that gets right back up to above the 515, which I think is the really key level that bulls need to get back above. I don't think it's going to happen super easily, but I could be wrong. And it's worth it to keep, depending on your outlook on the market, 10 to maybe 30% of any long positions that you have from the last few days, just in case the retracement higher actually becomes a reversal, whether that's through a V bottom or a higher low. But at the same time, this is all you can expect. What I like to say, half jokingly, is that the easy part of the market up move is over, and now it's the prove yourself part of the market up move. The market has to now really prove that it can clear above some key levels, not just give a dead cat bounce. And at the same time, as you are booking some profit but keeping maybe a small percentage of the position, this is also the spot, especially if you have a bunch of longs on, where you can begin to work in some shorts. You can begin to work in some trades that are going to hedge out the portfolio that you have, that'll hedge out that 10 to 20% of your long, 10 to 30% of your longs that you still have, but also can be manifested as actual trades. So now, if you're able to short the market with me and Josh today, you know, short the Qs or short the SPYs or whatever, it's kind of the same. It's kind of the same thing. Hold some. We now have a potential pivot high. I can't tell you if this potential pivot high is going to give you the higher low, or if this potential pivot high is going to lead to a move down to 480. But I can tell you that, you know, if you want to manage your reward properly, it's worth keeping a percentage of that position for this potential move to 480, because wow, that's really where your reward maximization is going to come in. That's where the big risk reward ratios really come in, that overall can have enough of an impact on your account to make you a consistently profitable trader. That's what you want to do, I think, on both sides. So right now, you as a trader could be in like a great win-win situation. You could have just booked some profit on some longs. You've still got a percentage of those longs left. If the market pulls all the way back, you're going to get stopped out of that percentage, but you'll still have made money on the long trade. You also now can have on shorts. And by this point, with what the market did today and what the market's doing after hours, you should also be in a win-win situation on your shorts. So now, worst case scenario for your shorts is that you get that higher low situation, the market snaps back up, it gets above today's high, it works its way up to 515, whatever. You get stopped out of your short positions, either depending on how greedy you were, making nothing, which I think is great on a failed trade, or even making money on it, but you'll still have those longs. Or if the market totally falls away here, you'll get stopped out of those longs, still haven't made money, but you'll have the short on now for the bigger move. You're in like an ultimate kind of, as much as possible, win-win situation here if you. And I think that's the position that you want to be in. So yeah, and that's why I like these trading environments. Even though I tend to be an optimist, I tend to be a bull. But market was getting a little boring there on some of those days in March, where we would move up a little bit and then go sideways pretty much all day in those tight ranges, and then we move up a little bit more. This gives you more overall trading opportunity to take advantage of the big downside extension, the higher VIX, the big snapback, and that's where we're at. So I think that pretty much covers everything. On the more micro for stuff, I tried Tesla short up the open. I talked about the trade once already during the day, but I'll just mention it again, just so because I think Jeremy was asking me for more, like specific trade ideas and how to execute them in yesterday's afternoon meeting. So the after hours high was literally at 8 p.m. yesterday. It was $164. Off the open this morning, the stock rips real immediately. It's what this upside tail is, and gets above 164. I knew that 164 was important from after hours yesterday. I thought that the earnings report was garbage, so I had a downside bias, but you need your bias to be confirmed by the price action, and there is a lot of extension here. So I was like, all right, as soon as it got to like above 164, I put a sell stop for an entry at 164. That triggered. I then put my buy stop to take my loss at 164.64, so risking 64 cents on the trade, and then I wanted to see what it could do. To my disappointment, it only worked for about $6 off of that 64 cents worth of risk. So pretty good trade, but still a failed trade. But giving you 10 to 1 on the risk reward there on the downside before failing and eventually stopping you out. So that was my only real trade that I took with Tesla. And once those opening highs broke, I stopped myself out. I just kind of moved on with my day. And I also, unfortunately had to step away for a couple hours midday today. So traded Tesla, traded the market, and managed my open positions. That pretty much covers my day. I am happy to look at any questions that any of you guys have. All right. Scrolling up in the VTF. See if I missed anything. From Carol, could be that in this earnings season we will see more weakness from big caps and the small caps will hold in much better. Maybe. I think that the premise of your question is what I was talking about stocks that are up a ton. Stocks that are up a ton in this environment, like with Meta, Netflix, if they report just okay earnings, they'll come down, and that tends to be that tends to be what we're seeing so far. Whereas your small and mid caps tend to be more beaten up into these earnings reports, so maybe they'll perform better. With that said, I was doing my morning research this morning and noting how well Tesla was trading on what I thought was a bad report, and looking at some of the other companies that were reported that were beat up into their reports that looked like they were just okay earnings reports to me, and wondering if they could bounce, and for the most part they didn't. Boeing gapped and crapped, totally failed. I thought the earnings report was okay, but Josh brought up like a really how do I compliment Josh the best way possible? Josh brought up a really educated comment when he said the way that they mentioned their cash balance, and it was also the way that they mentioned their access to a line of credit, basically, is very almost like Lehman-esque, right? You haven't seen that kind of language come out for a while. I guess you have actually with some of the regional banks, but it reminds me of, it's not a good thing when they say that. So that was a really astute observation from Josh, and it's probably part of the reason why Boeing led to a failure. Like Humana, I thought the earnings report was just okay, and they sold Gap and crap also. Gapped this thing up and sold it down. The Biogen report I thought was pretty decent. It held in okay. But, I guess to directly answer your question, Carol, we'll see. We'll see if those beaten up companies can actually hold in better on these earnings reports. Tesla certainly did it, but a couple of these other ones that we were looking at this morning certainly did not. Does it tell us by nature that the market is bullish because our civilization is growing, life is always growing? So, I mean, if you want to be really, really, really big picture about things and kind of invoke more of like a Warren Buffett thought process, uh, then yeah, in theory, over enough period of time, even though there will be pullbacks and bear markets and even potentially depressions, the market should continue to be able to move higher as long as humanity is able to exist without there being a massive, massive crisis. This is one of the reasons why I, for my own trading, tend to be bullish and tend to be optimistic. It's as simple as because the market, more times than not, is going up. It's not going down. With that said, we should recognize that in those periods of time when the market moves down, you have a lot of opportunity to make a lot of money in those short periods of time because of how fast the movement is. But if you were just to point to any random period from the last couple hundred years of markets, or going back to the beginning, more likely than not, that random period that you're pointing at is up, not down, and it'll always kind of it should in theory always be that way until the sun overtakes the earth, or until we blow ourselves all to kingdom come. One way or another. One way or another, that will happen. I like to say that in the short run, I'm always a bull, and by short run, I mean over the course of the next decade. But in the long, long, long run, well, we're all going to be dead no matter what, right? Yeah, it's just Derrick the Trader on YouTube. Popping over to the YouTube, where I see a bunch of questions are popping up. How do you view Spotify today after the sell-off? Oh, interesting that they sold Spot all the way back down today. I don't know what that's about. I didn't watch this. It was moving yesterday on earnings, right? Yeah, it was yesterday on earnings. It gapped up really big. It looks like it held in all day, but there was a little bit of an upside tail. They sold it off a bit into the close. I don't know. I thought the Spotify report was good. I didn't look at it very closely. I thought the report was good. I don't know what happened between yesterday and today that caused a total filling of the gap. But it's not what you want to see. There's some support around 260, some support around 270, but I do not like that negative Maribozu gap fill off the day after the Spotify earnings. So I would be very cautious on this today and tomorrow. In the near future, while that negative Maribozu is there, it doesn't look good. From Kevin, how did you manage your Affirm position? Well, I'm still in it. I'm still short Affirm. And again, it's like I said in yesterday's afternoon meeting, the decision to keep it overnight was not really an on-tilt decision. It was more related to just my thought process and where the market is, with exactly what I was talking about already in this afternoon meeting. I added to my Affirm short. I don't remember if I did that pre-market or after the. I did a little bit pre-market. I did a little bit after the open. I nabbed some stock at 33.24. High of the day is 33.27. This is a pretty good fill on the sale. It's that dot right there. I covered some of the position on the way down, but I am still in it. I have just a little bit less of a position than I had yesterday. I made back probably half of what I'm down in it. Not trying to trade my P&L, but I do want to keep it short on the books for the moment. So I'm going to continue to work the position here a little bit. Honestly, I'm trading my P&L a little bit. I got to be honest with you. I'm trading my P&L a little bit, which is always, again, going back to what I was saying yesterday's afternoon meeting, something I highly advise that traders do not do. From Robert, not surprised CMG is at 350. One burrito in London costs 20 to 25 pounds. One burrito in London is 20 to 25 quid. That's a lot. I think in the U.S. here it's still, I don't know, $13 or something. But again, I've been out of the big city for a while, and inflation keeps ripping. From PB Freak, how do you like the shooter on COP? 2 inside days in a row. I like it. I like energy right now. I like the energy sector. So I think you could look at the COP for continuation higher. I think it's enough of a correction. I mean, you pulled back from 134 to 127-ish, and some decent little correction into, even overshot the 21 EMA a little bit, and it's also corrected through time a little bit. It's been going sideways up here. So I think that it looks okay. I think that energy looks okay too. Maybe there's a little bit of relative weakness compared to the XLE with COP, which you should note. From Gabriel. Thanks for the level discussion yesterday. Shorted the cues today as we caught a bid after the first 15 minutes and then sold off first highs. Beautiful. Yeah, that's the same thing intraday I called out to the VTF team today, was shorting versus this 950 high. Good stuff. Obviously, Meta helped, but already covered more than half into 425. Good stuff. Really good stuff. So only holding about 30% in case the reaction to the report was bad. Great stuff. And it is so far. On the long side, I have TMDX. For some reason, that weird little heart jumps in front of the bottom comment sometimes. Yeah, I don't know this. I think you mentioned this TMDX yesterday. I really don't know the name. And you got your risk covered. Great. Good stuff, Gabriel. All right, gang. I'm not seeing any new questions popping up in the VTF. Again, just to remind everybody who's part of our team in the virtual trading for the afternoon meeting, this is where we make our gains. Guys are asking about, what workouts they can do at their computer in the VTF today, or when they're at their computer, so they can get some gains. Well, this is where we do our gains. This is where we get our trading gains. All right? We get our trading gains by being in the afternoon meeting and participating in the afternoon meeting and asking questions, because the questions benefit everyone. So don't hold back. If you have trading questions, this is our afternoon meetings are where you want to ask them so that we can all continue to improve as a team. So on that note, I'll wrap it up. Have a great night, everybody. See you tomorrow.